The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, look at big picture at this market trade action as we near the end of the month of September. We've had a fairly decent grain market rally this past week that's maybe been met with a little bit of farmer selling, among other factors we're watching here in the U.S. and around the world. Plus, you look at a livestock trade, kind of mixed action there. We saw new inflation data, the PCE out Friday morning and more. Let's talk about all the different things that are happening and get a good snapshot of things. Joining us for a conversation, Ted Seifert with Zaner Ag Hedge is back with us here on Market Talk. Ted, good to catch up with you, buddy. How are you?
I'm doing great, Jesse. How are you, man?
Hey, I'm doing good. I've been enjoying seeing a little bit of green on the screen in grains and oilseeds here this past week. We saw some good support in beans and meal too on Friday, and a bean oil sale to South Korea that flashed on the Daily Wire too. But I think a little over $1 rally in beans. That's a good thing, I would say. I mean, that's a good way for us to kick off this show today, Ted. I feel like just some decent support in the grains here this past week.
It's a good thing as we're headed into harvest, right? I mean, we were 13% harvested in beans as of Sunday. And there was some progress made this week, but obviously there's been a fair amount of rain kind of slowing us down, even going back to, Monday. West has been good, but yeah, there's been some delays in the East, I think, at this point. Either way, it's kind of unusual to rally into a harvest like this. What I will say is that I don't think we have gotten past the harvest pressure. In fact, I don't think we've gotten into the bulk of the harvest pressure just yet. There's just seemingly been a real lack of sellers in the market. But we've also been really watching weather, and the weather, the kinds of weather that create uncertainty, Jesse, because they're two different kinds that we're watching right now. But uncertainty causes short covering. And when you have still fairly large fund short positions, although they're well off the highs, right? Well off the big numbers that they had. And also, I think maybe just a little bit of commercial short covering as well. It being triggered by, obviously, we are watching Brazil. It is dry. This is normally their dry season, but it's been drier than normal even. They're really behind on rain, and the Brazilians really like to plant into moisture, specifically for soybeans. And so they're not terribly behind. I mean, it's still very early for them for planting, but when we look at the forecast, there's not a lot of precip in there. The longer term forecasts are a little bit scary. That is caused the market to think that, well, maybe they won't get planted in time. And if they don't get planted in time, at the minimum, that extends our export window and maybe brings more business to us, which we need, right? We've just now caught up to where we were at this time last year, and yet we need another extra 150 million bushels to hit the USDA's target for our export program this year. So we need those. We could really use an extra 3 weeks window to play catch up to get to that USDA number. At the worst, though, Jesse, maybe they lose some soybean acres, and they're projected for a massive crop. So you lose some acres, maybe that makes things a little bit better in the world. I don't know. We'll see. I still think that I'm of the opinion that they'll get that crop planted, and I think that the rains will start eventually. And when they do, as we're seeing right now, when weather patterns change, they change. That's my thoughts at the moment, but we'll see, right? I mean, we're gonna have to see those forecasts get a little weather. And then at the same time, like I said, we're watching two different types of weather right now. At the same time, you've got this hurricane that really intensified dramatically right before it hit landfall, that is now wreaking havoc on a lot of acres in the Delta, in the Southeast, and there's concerns that there could be damage. There's very strong winds, and a lot of rain happening. Ultimately, maybe the damage, it's one of those things, Jesse, where things are hardly ever as good as they seem or as bad as they seem. But we always worry, right? The market worries. That's the market's job, is to worry, and uncertainty causes worry. So with those two things going on at the same time, I think that's caused a lot of covering going into Friday and throughout Friday. Now, what it looks like next week could be a very different story. As you mentioned, we have a big USDA report in the form of quarterly grain stocks that does represent our ending stocks for last year. Also, our beginning stocks for this current marketing year. And if there's any big surprises there, that might actually end up taking center stage, and it could really kind of set the tone for the rest of harvest and maybe into the rest of the calendar year.
Thinking about in terms of maybe demand from China with some of those weather issues, and I wonder if maybe there's been some rumored Chinese bean sales once again here as we closed out the week. I'm wondering if some of that's happening. We've seen a lot of Chinese economic stimulus here this past week as well, Ted.
Yeah.
Your thoughts on that? I mean, is China back potentially buying U.S. beans as a, just in case we can't get the supply from South America type of mindset potentially?
Well, see, that's what needs to happen, Jesse, because, if you go back to the dryness in Mato Grosso last year, we were all like, oh my gosh, they're going to lose their crop. It's, oh no. And it was not a good crop for them. But if China's not in here buying, that means they're not really worried about it, which means does it even really matter? And we just, for the life of us, couldn't get a significant rally based on that dryness in Mato Grosso last year. Okay, the dryness or weather problems are supposed to be a trigger for the end result, which the end result is buying, like actual physical demand. If the impetus doesn't trigger the end result, then it doesn't really matter. So yes, there has been reports of 6 to 10 cargoes sold to China in the last few days. Actually, really starting with Monday, could be more. We haven't really seen it on the daily flash sales. Maybe we'll see it show up in the weekly export sales report. But China needs to be buying in order for us to really get worried about what's happening in Brazil, because until they're worried about it, the market really doesn't have any real justification to be worried about it. And then the stimulus that they're providing, that's kind of a double-edged sword, Jesse, because you love to see it, and the immediate thought process is, okay, well, now they have more money potentially to go out and buy raw commodities, to buy soybeans. They have more liquidity, right? But then you also have to ask yourself, why are they doing this stimulus, right? Are they finally admitting that things are quite a bit worse off for them than what they are really wanting the rest of the world to know? And if that's the case, it doesn't really bode well for the longer term. It also, has the potential to create commodity inflation for them, which again might be beneficial for our prices in the short run. But if they do that on top of stimulus in the mid to longer term, it's actually a really bad concept, really, for commodities markets, because it'll make it more difficult for them to source more grain further out in time. So, yeah, again, I think the market's looking at it as a positive. I think the near term that should be a positive. But all the things that we just talked about between weather and stimulus, it has to be followed up by big purchases from China. Otherwise, it really doesn't change our domestic balance sheet. It doesn't change the global carryover, which, by the way, I mean, that to me is the biggest negative for soybeans. We went from, just under 100 million metric ton carryover 2 marketing years ago to a 135 million metric ton global carryover. That's a massive, massive increase. The world is flush with beans at the moment. So without a major South American problem and without an increase in Chinese demand, it really, is there anything to get that excited about? And that's the thing. And also, like I said, when harvest really gets rolling and we get into about 20, 30, 40% of the harvest, a lot of those bushels are going to have to make their way to the board. I mean, I don't feel like we are very well sold on this crop that's coming out of the field right now. And when those sales start to happen and the funds see that pressure on the market, they'll stop covering shorts and they might join in on the short side too. So I'm worried that the harvest lows might not be in yet, despite the fact that, yeah, maybe we've got some slightly more positive fundamentals here over the last couple of weeks.
Ted Seifert with Zaner Ag Hedge, our guest analyst here today on Market Talk. Ted, how about the corn trade? We've seen a little bit of strength. To me, it's felt very range bound, kind of like that 425 area is over top here. It feels like as our resistance, and we're kind of, we worked off the lows, but now we're just kind of in the low fours here on the board as we get into harvest. I mean, what's your thoughts of this corn market overall?
So corn is the one that I think is very interesting. These are the levels that we traded Thursday and Friday. The highest we've been since July. But to your point, it's not really posted that big breakout to the upside. Is that coming? And I'm wondering about that. I'll say that export sales for corn have really slowed down. That's a little bit of a negative. But aside from that, Jesse, I'm not terribly bearish corn going into next year's planting, next year's growing season. But there too, I worry that we haven't had the bulk of the hedge pressure happen yet. I do think there is here too a lot of unsold new crop bushels, maybe even quite a bit of old crops still out there. I think these bushels are still going to have to hit the market. I do think that there could be another big push to the downside if it's not offset by some pretty significant buying interest. And for the fact that it's not been able to break out to the upside just yet, even though soybeans have had a really nice run off the lows, it's a bit of a concern. It's one of those things where it's going to happen really sooner or later. But longer term, you think about it, Jesse, and you say, well, we got to have a 183 national average yield in order to sustain a 2 billion bushel carryover. Not that we need to sustain 2 billion bushel carryover, but a 2 billion bushel carryover nowadays, Jesse, is much different than it was 5 years ago, right? We have the potential to cut through that a lot quicker. From a global perspective, if there's any shortfalls, again, with South America, right? So if that's the case, what happens if we have a 176 national average yield next year? And you got to say, well, we probably could use some extra corn acreage in order to cushion that. And the corn prices where they're at right now, I don't think are buying acreage, right? I just don't feel that. And the recent strength in soybeans is maybe actually pulling away potentially from corn. Now I know that a lot of rotations were set back in the fall when we were making purchases on inputs, but there's always those swing acres, maybe 10 million acres that can go one way or the other when we make our final decisions in the spring. And so, like I said, maybe the lows aren't in there for corn or beans at this point. I do still think there's a lot of cash bushels that need to be sold, and that will pressure the market. And if we get past, if it starts to rain in Brazil, that really takes away a lot of the reason to go higher in the very short term. So I do worry that there might still be lows coming. But that being said, I think corn has the potential to really lead the way higher into the end of the calendar year and into the early spring months.
Wheat found a little bit of pressure Friday. Cotton's been volatile as of late. Some of the other commodities. Any big notes for you across the rest of the commodity space here? Or, we can always talk crude oil. And that's actually one topic I do want to ask you about here as well. So, you look across some of these, plenty of volatility as we've kind of wrapped up the month of September to some degree here, Ted.
Yes, Jesse. Okay, so I'll touch on wheat really quickly. It's really dry in some of the major producing areas in Russia, and that's a concern, right? And the Russian attaché said that maybe they're not going to be planting as much wheat this year, probably due to the dryness. So wheat has had a reason to come off the lows. Now, you look at our domestic balance sheet, Jesse, and it's not getting better. So it's one of those things where, wheat is such a global market, but it's really split between countries that do business with Russia and countries that don't do business with Russia. And if there's a Russian wheat problem, it doesn't necessarily mean that we're going to get a whole bunch more business in wheat. Now, it does maybe change the global picture a little bit. I don't know if it changes our domestic picture. So I don't know. Jury's still out on wheat, but it has had, I'd say, justification to bounce off the lows. There's been problems with France as well. So production issues, that's given us a reason there. As far as all the other markets and the volatility, well, man, we've got so much going on between, U.S. cutting rates, half a basis point, the stimulus that's been talked about in China. You've got OPEC, because you said you wanted to talk about crude oil, but you've got OPEC saying that they're abandoning their $100 target and that they will be likely increasing production, which has put pressure on the market. You have a whole lot of concerns about, whether the economy is going to stay good throughout the election in November and beyond, or if we are headed into a much bigger slowdown than what we've seen since the beginning of COVID. I don't know. I kind of lean towards the latter, and I think the stimulus in China is really an indication that they're trying to patch holes in a sinking ship. Not necessarily a sinking ship, but just like their submarine that sank. I don't know if you saw that, but they had their state-of-the-art nuclear submarine. It was going to be their crown jewel of their underwater fleet. That it's sitting at the bottom of the ocean now. Anywho, there's just so much volatility because there's so much uncertainty and nervous markets because we're not exactly sure what some of these conflicting things have to say. Stock market keeps rolling along. You cut rates, that's great, but cutting rates in the U.S. hasn't always necessarily been indicative of continuing higher stock market, continuing higher GDP, things like that. A lot of times it's been a precursor to a slowdown. And then you can say the same thing about the Chinese stimulus. So I don't know. I'd like to say that I think in the near term, I'm pretty friendly economy-wise. I think things will stay pretty good through November. I think they will maybe cut more interest rates whenever they can, even if it's in an emergency session if they had to. But longer term, I don't know. I worry about what happens as we get into the winter months and into early spring. We'll have to see how that plays out.
Yeah. How about the livestock trade, Ted? We'll wrap up there. And that's, kind of been tied with the economy and the stock market, et cetera. Decent end of the week on Friday in cattle and hogs. The hogs and pigs report felt fairly neutral. The recent cattle and feed report was fairly neutral. So I guess your perspective across that protein sector, anything big standing out to you right now?
Yeah, the cattle and feed report in particular was extremely neutral. Everything came out within percentage or hundredths of what the expectations were. So, okay, non-event really. The statement date for me, Jesse, was Thursday. It's been a very nice rally off of a low that looks to me like a longer-term low with sort of an inverted head and shoulders bottom with the lows that we put in August and September. And it's been a nice run off that. We cleared some of the major moving averages in the form of the 100 and the 200-day moving average. On Thursday, we backed off and we tested those again. And then we had an outside reversal day higher. And so a statement like that in a market like this suggests that we are confident in our near-term demand. We still have, we've never really fixed the supply issue, at least not to the degree where it really justifies sharply lower prices, in my opinion. And as long as we don't feel like the economy is falling apart in the near term, I think there is still some more upside potential. That being said, it's been a very nice bounce off of lows, and not knowing about what the future holds and the uncertainty that we do have for the overall economic standpoint, and we know that has a big impact on what producers' choices are at the butcher's counter. I do think it is a really good time for producers to look at, I'm going to say, some loose hedges. I don't know if I'd be aggressively selling cash cattle here if you don't have to. I don't know if I'd be aggressively selling futures here either, because I do like to look at the chart. But ownership of some puts, putting in a floor below us, I think is a really nice idea right here. And I think it's you look at the prices that we're at compared to where we were at the beginning of September, and you say, okay, this is a much more comfortable level for me to do something like that.
Ted, great stuff as always as we wrap it up here today. If folks want to reach out to you there at Zaner Ag Hedge, have a conversation, take a look at their marketing picture and more, how can they get in touch with you?
Absolutely. You can reach me directly at 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. You can read a bit about us, read our bios. Also, I have an afternoon just a quick 5 to 7 minute update that I do on the markets. You can sign up for that. And then if you're on the X, formerly known as Twitter, I am at the Ted Spread.
Ted Seifert, Zaner Ag Hedge. Always enjoy a conversation, my friend. Thanks for being with us here today on Market Talk. Have a good one, and we'll talk to you again soon.
Thanks for having me, Jesse. You have a great weekend. We'll talk to you later, man.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.